Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, CoinDesk Managing Editor of Global Capital Markets, Lawrence Lewitton, and Managing Director of International Content, Emily Parker. Good morning and happy Friday, Emily and Lawrence.
Happy Friday to you.
It's another all-time high kind of day, but it's not Bitcoin. But let's take a look at the CoinDesk Bitcoin price XBX index right now, trading at $60,948. Bitcoin is actually slightly down about 0.3%. And the Ether, CoinDesk Ether ETX index is at 4311. Down from its all-time highs just reached earlier of about $4,402, but still up about 3.3% over the past 24 hours. And the new DFX CoinDesk DeFi index is at 633 points. It's down about 0.2%. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as a leader in crypto news, events, and data. So that's our top story, folks. ETH breaking records at $4,402. What's behind that, Lawrence?
It depends who you ask. Some of it has to do with obviously there was an upgrade that happened where you basically can have the mainnet transition. It's going to help the transition to proof of stake Ethereum 2.0, and that was the upgrade happened with basically all nodes accepting. But the other thing too is SHIB. I mean, that's SHIB. So SHIB runs on Ethereum. And the more you use Ethereum, since this upgrade back in the EIP 1559, which happened 3 months ago, the more you use the network, basically the more ETH gets burned as part of the process when fees are paid. It just some of it just kind of gets burned out. So you had all this excitement, all these transactions happening on ETH. And that basically led to more ETH burning. And the fewer ETH you have in the market, the higher the price goes. Basically, the fewer supply, more demand, or even equal demand, prices go up.
So we're seeing ETH shooting up compared to the rest of the markets, which is taking a bit of a step back. Also, one news item that there's some Shiba Inu price action there for you. But another news item I want to bring up was Facebook is renaming itself to Meta. They're focusing on the next iteration of the internet, the metaverse, and that will include support for NFTs, giving people the ability to display them in their digital spaces and securely resell them. And it came with a pretty cool presentation by Mark Zuckerberg. What are your thoughts on this renaming and this focus on the metaverse, Emily?
Well, it's really interesting because one of the big topics in crypto has been, is this going to go from this sort of like decentralized Wild West environment to a more, corporate monopoly type of thing? And that's something that really happened with social media, right? Social media at first was like this really Wild West, dissidents using it, really decentralized. And then all of a sudden it was, Facebook and Google and Twitter. I mean, you kind of had these really big players sort of taking over a lot of the space. So now we have literally Facebook, coming into this new space. And I think it raises a lot of questions, not all of them good, about what's going to happen to the future of the metaverse. Like, is this just going to become another, sort of Facebook colony?
Right. I wonder if they're going to if they're going to sell NFTs of all those documents that the whistleblower was publicizing. That'd be a good NFT to buy on Meta.
The internet is picking up on that, Lawrence. Zuckerberg is getting heavily mocked online. We have a tweet from performer John Fogelsang tweeting that Facebook is changing its name to Meta is so exciting. I've already forgotten that we just learned they knew women were being sex trafficked on the platform and did nothing. And there's another one from Massachusetts Senator Ed Markey tweeting, Facebook wants us to start calling it Meta, but we're just going to keep calling it what it is, a threat to privacy, democracy, and children. So it's going to be a bit of an uphill battle when it comes to PR. Let's check in on our markets guest. All right.
Oh. Well,
all right.
We keep trashing Meta.
There's usually a sponsor segment there, but we'll just we'll just head into introducing Michelle. Joining us now to discuss the crypto markets is Market Gauge Group Managing Director Michelle Schneider in New Mexico. Hello there, Michelle.
Good morning.
So ETH is hitting an all-time high, and what are your thoughts on? Are you going to? Have you been trading in SHIB? Have you been trading in ETH?
I actually have traded SHIB for the first time. I was so proud of myself because I feel like I've I think I've shed like 40 years from my life actually doing that. So in a good way, I mean, it's really fun to join the momentum, and so much of what's going on in the dog coins particularly, and that type of emotional reaction where you can just sort of get in and ride the fever seems like a brand new thing, but for those of us who've been around long enough, it was kind of the way commodities were back in the heyday, where you didn't have to know anything about it. You just knew that the momentum, the volatility, and the volume came in and the excitement, and you just go in and followed it and got out when the momentum started drying up. And that may not last forever, but it's certainly what's going on right now. But one thing I do want to mention about SHIB, different than what Lawrence was saying about Ethereum, is that SHIB has no scarcity. There are, I just read 49 trillion coins around. And so that makes it really, it's not a scarce situation. It's strictly an emotional momentum type of play.
Although in all fairness, with that, even though it has trillions of coins out there, it doesn't really matter. I mean, in all those situations, because you could put $100 into SHIB, you could put $100 into ETH. It's not going to make a difference. I think what the issue is with ETH is that the amount decreases. So even if you had an equivalent amount of ETH, it wouldn't change much other than, price percentage wise wouldn't change. It's the decreasing amount and people still holding, and much, as Omkar Gadboli said, it was the equivalent of a stock buyback. But the other question I have is, speaking of scarcity or lack thereof, is the ETF, the Bitcoin ETF. Has the interest waned in the ETFs? Are people kind of basically they've just about had it? They saw what it could do, or is there any kind of momentum building with other ETFs coming online? Do you think that we've just about had it with these ETF features, these futures ETFs?
You're talking about like BITU, the new one, BITU?
No, in this case, I'm talking about the Bitcoin ETFs. Yes, in general, all of them.
BITO, I'm sorry. Yeah.
Yes.
Well, I don't know. I think I'd say maybe a little bit of both, if I can kind of put my feet on both sides of that fence there. I think that there's look what's happening with Robinhood. I mean, that might be the classic thing with the Doge and SHIB coins, is that where people were buying it through Robinhood, now they're able to do it through actually real crypto exchanges. And there may be more of a movement towards doing that, as opposed to buying certainly the delayed grayscale ETFs and now the new one. But on the other hand, I think that it's new. And I believe that it will continue to catch fire over time. It's certainly going to be perceived, particularly I think by older generations, as a more position-based place to put on something, as opposed to trading the coins and getting in and out, which has been a lot of fun, particularly in those, like I said, those dog coins.
Michelle, the market has been so frothy lately. I mean, with the ETFs and the all-time highs. I mean, do you see any possibility of a correction coming anytime soon?
Emily, are we talking about now equity market, or are we still talking crypto market?
No,
I just want to make sure.
Bitcoin specifically. Bitcoin specifically.
Well, I think we see this over and over again. What's been so interesting about all of the coins, actually, and including Bitcoin, is that they've become pretty technical. And so you can listen to news and upgrades, downgrades, and all different types of analyst comments, from the most bullish to the most bearish. But ultimately, as a trader, I have always relied on price, historical price action, and what the price is telling us. And what we've seen with Bitcoin in particular is that it consolidates. It actually goes down in volatility for a while. And then something happens, whatever the trigger is, it doesn't matter. You just know from a technical standpoint, it breaks out of a certain area. So now we just had those highs, And now we've come in consolidating between 58, 60,000, really. And I think if we can get through 64,000 again, we'll see 75, 80, probably sometime in November, maybe December.
All right, awesome. Thanks for the update, Michelle. That was Market Gauge Group Managing Director Michelle Schneider. Coming up, we'll head over to Asia with our daily forecast. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the daily forecast, October 29th, 2021, where things are about to get spooky. I'm Justin Solomon of Forecast News, covering all things blockchain, filling in for Editor-in-Chief Angie Lau. Korean pop culture has taken the world by storm of late, with boy band BTS and Netflix drama Squid Game seeing a huge global success. However, alongside that hype comes warnings over a crypto frenzy and fake coins. We'll take a look at those stories and a lot more coming up. Let's get you up to speed from Asia to the world. First up, the popularity of K-pop and K-drama is seeping into the world of crypto. Tokens inspired by the Netflix series Squid Games and K-pop megagroup BTS have both gone on sale, but neither may prove a wise investment, with warnings being issued over each of them. Forecast News' Danny Park has more.
Squid Game, the South Korean Netflix sensation, captivated more than 142 million households in the first 4 weeks of its release. Now there's a Squid Game cryptocurrency whose white paper says it will be used to join a play-to-earn online game inspired by the tournament in the TV series. The token, which is not affiliated with Netflix, saw its price soar over 1,000% in the 24 hours to early Friday Asia time. However, CoinMarketCap warns users to take caution in trading the Squid Game token, as it has received multiple reports that users are not able to sell it in PancakeSwap, the token's only market right now. Meanwhile, on Wednesday, Singapore's BitGet exchange listed ArmyCoin, named after the fandom of K-pop boy band BTS. According to the token's official website, the project is made out of dedication towards BTS as fans, and that 50% of ArmyCoin will be donated to BTS's wallet. Hype, the K-pop group's music label, responded by warning fans and investors to be cautious, saying the token has no affiliation with BTS or the company, and that the token's aim to fund BTS with its profit is fake. It went on to say it will take legal action against any infringement of publicity. For Forecast News, I'm Danny Park.
Meanwhile, the dogs are going to town on the crypto markets. Yep, that's right, a dogfight has been the name of the game over the past 24 hours, with Dogecoin and its pup Shiba Inu battling it out for a position as the top dog in the crypto top 10. Forecast News' Lachlan Keller reports.
The once derided Shiba Inu token has been on a price tear over the past week, gaining more than 200% to hit a new all-time high on Thursday. That saw it leap over Doge to take 7th position in the leaderboard by market cap. However, that high was quite brief, and a price tumble saw it slide back to 10th position by Friday morning Asia time. But as SHIB receded, Doge responded by jumping 44% in 24 hours, hitting a 2-month high of almost 34 US cents. And while it's also fallen since, it's now sitting just above SHIB at 9th place in that top 10. For Forecast News, I'm Lachlan Keller.
And finally today, not quite set to celebrate a spooktacular Halloween in crypto land? Fear not. Forecast News' Monica Ghosh has rounded up some of the most blood-curdling horror stories in crypto to get you in a ghoulish mood.
Trick or treat! These are some of the most terrifying crypto stories so far this year. First up, when a deadly hailstorm rains down from the powers that be. That's what happened in China on September 24th when crypto trading and mining were banned. The move sent shockwaves through the industry with the price of Bitcoin slumping 6%. However, there were omens ahead of the move, with the clampdown on mining kickstarting a mass exodus of miners earlier in the year. But has that course followed those crypto miners? A significant number thought they'd found a safe haven in Kazakhstan, only for the lights to start flickering out. Kazakhstan emerged as the second largest Bitcoin mining hub in the world after the US, following that exodus. But those miners' relief has been short-lived, with the country's energy minister proposing a draft bill to limit electricity supplies to new miners after several regions suffered from power shortages. And finally, watch out for bloodthirsty crypto vampires. You might not recognize them on the street, but you'll certainly know when the hackers have bled you dry. August saw the biggest hack in DeFi history, though that lost spirit found his way back to the light, returning the $600 million worth of assets stolen from Poly Network within 2 weeks. Best watch out for those crypto bumps in the night. For Forecast News, I'm Monica Ghosh.
And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Justin Solomon. Until next time.
All right, let's have a live look at Bitcoin. The CoinDesk Bitcoin price XVX index trading at $60,890. Bitcoin is slightly down about 0.6%, but the only coin that's up, it's ETH, of course, trading at 43.12, now up about 3.2% after reaching that all-time high hours ago, above $4,400. And the DFX, CoinDesk's DeFi index, is at 634 points, down still about 0.7%. All right, well, we deserve a better internet, says investment firm Andreessen Horowitz, one with more resilient, inclusive digital infrastructure, renewed trust in institutions, and an alternative to broken tech paradigms. How do we get there? Clear regulatory frameworks from government leadership. And joining us now to discuss is Tamika Tillman, Global Head of Policy at Andreessen Horowitz. Hello there, Tamika. You know, earlier we spoke about Meta, formerly Facebook, and they also spoke about the next internet, a better internet. And I wonder if there could potentially be a danger of big centralized companies taking over Web 3.0 and controlling all our data again.
Well, that is one of the issues that we're trying to address with the policy framework that we have put forward. We see a real critical challenge in the form of the Web 2 platforms that have consolidated a lot of the internet under their control. If you look back at the broad history of the evolution of the web, we had the first generation of the internet, which was really based on open protocols and largely decentralized. And then this period of massive centralization that occurred in Web 2. We're now seeing a lot of the negative fallout from that period of centralization, and we think it is time to move on to the third generation of the internet, which will be defined by more open protocols, but for the first time, as a result of the advances that have been made in digital assets, we have business models that can support community-owned, community-governed platforms in a way that we really weren't able to in the first generation of the internet. That is a huge opportunity to get things right if we get good support from policymakers.
Tamika, so nice to see you on the show. So, Tamika, you're a former speechwriter. You have the unique ability to kind of take complex concepts and explain them in a simple and accessible way. So I'm going to ask you to do that now. I think one of the issues that I think you and I have talked about before is that there's a challenge in communicating these concepts to policymakers and to, people in Congress, because they're just thinking about really immediate concerns. And they're thinking about, okay, what is going to be an election issue, right? So how would you take some of these lofty concepts and just give them a sense of urgency, right? Like give them a sense of urgency to people in Congress and say, okay, this is why we need, Web 3.0. This is how you would translate this to your constituents. This could become an election issue. Like, what are some of the ways to frame it in a more urgent, way that people would actually vote on these issues?
As we've been discussing these challenges with policymakers in Congress and the Senate and the White House, there are three arguments that really seem to resonate. The first is the fact that the internet as it exists today is neither desirable nor sustainable. It is not compatible with a healthy open society. We see that in the form of 100 major data breaches every business day last year. We see it in the fact that the economic gains of the digital economy are accruing to a handful of individuals who sit on top of the large legacy platforms overwhelmingly. And we see it in the fact that individuals are increasingly mistrustful of both the platforms and the institutions that rely on the platforms. So we see a big opportunity to create a decentralized internet that will give individuals greater control over their digital identity, greater control over their information, greater control over their assets. We see a critical need for open societies in general, and the United States in particular, to develop a system that can compete, a paradigm that will be able to compete effectively with others in the world that are rolling out increasingly sophisticated platforms that are far advanced and really far superior technically to the digital infrastructure that's available in the United States. And we also see an opportunity to decentralize the opportunity that exists around the digital economy, eliminating middlemen, eliminating many of the gatekeepers that control access to participation in the global economy today, and pushing out many of the benefits to those who are currently on the margins of the progress that has occurred in many spaces as a result of innovation in recent years.
So, Tamika, of course, one of the ways in which that's happening is in stablecoins, where we're seeing, if you will, almost a combination of real world versus the virtual world, and we're expecting some sort of comment report from the FSOC any day now. How do you think stablecoins should be regulated, and how do you think they will be regulated, and how would you compare the two?
Well, we see three key priorities that should define stablecoin regulation. And we'll leave it to the FSOC committee to opine on how they're going to do this. And we agree we're likely to learn more on that imminently. But the first priority is financial inclusion. We have a system that in the United States leaves millions and millions of people outside of the traditional banking sector, and they're unable, for a variety of different reasons, to access accounts worldwide. That number is much, much larger, in the billions. And so we need to be able to design a system that is going to provide more people access to digital financial services. The second thing we need to be able to do is ensure the integrity of stablecoin issuers and reserves. It's absolutely appropriate for regulators, in our view, to take an interest in assuring the integrity and solidity of the assets that underpin asset-backed stablecoins. There are, of course, a variety of different stablecoins. Some stablecoins, like USDC, have issued regular attestations by independent accounting firms to ensure that their assets match up with what they are claiming. We think that's a best practice that should be widely adopted across the ecosystem. And in our view, there are probably some legitimate interests that regulators have in ensuring that stablecoins are managed and run correctly. The final critical task, in our view, is ensuring the technical resilience of stablecoin networks. These are going to be critical infrastructure for the 21st century. We are going to rely on stablecoins and the networks that underpin them to power a lot of the internet's native digital financial architecture. And for that reason, it's totally legitimate to ensure that the technical systems at the foundation foundation of these platforms are run correctly. We think that if regulators focus on those three areas, and we put out an extensive paper with more details about our views on these issues, we should end up in a decent place.
So, Mike, if you just had to sort of pick right now, do you think that the United States needs a central bank digital currency? Yes or no? Obviously, there's a lot of caveats in there, but on balance, do you think this would be a good thing for the U.S. or not?
Well, I think the obvious and immediate opportunity for the United States is doubling down on the very vibrant innovation that's occurring in private stablecoin markets. Given the significant lag in U.S. policymakers' focus on these issues, and the fact that many countries are far ahead of the United States in trying to address these challenges, we're not going to be able to catch up anytime soon if we try to pursue a centralized CBDC-based approach. There may in time be plenty of room for a CBDC alongside privately issued stablecoins, but we think it's absolutely critical to preserve the dynamism and vitality of a thoughtfully regulated private stablecoin market in the near term and medium term going forward.
Micah, what are some of the consequences if the U.S. does not address this in a more timely manner?
Well, the United States has long enjoyed a role as the cornerstone of the global financial system. The dollar has been the centerpiece of the global financial system. We are seeing the emergence of a wide array of financial instruments that are technically superior to the dollar. They're dramatically more sophisticated. They're dramatically more usable in a variety of different applications than the dollar is today. There is a very real risk for policymakers that if we don't come up with good solutions, be they privately issued dollar-backed and dollar-denominated stablecoins, or potentially a CBDC that is dollar-denominated down the road, the United States and the U.S. dollar will lose the position that they've historically enjoyed as a cornerstone of global financial markets. And that'll have some very serious implications, not only for the U.S. economy, but for U.S. leadership and influence in the world. So this is a very high-stakes issue. It's good that policymakers are finally paying attention, but it's important for all of us to acknowledge that they're coming late to the game.
High stakes indeed. Micah, you have an article out. It's on CoinDesk titled Why U.S. Policymakers Should Embrace Web3. Readers, have a look. Thank you so much for joining us. That was Micah Tillman, Global Head of Policy at Andreessen Horowitz. Coming up, we'll take a closer look at Nigeria's launch of the e-naira with the developer behind it, and checking in with CoinDesk Global Policy and Regulation Managing Editor, Nick Day.
CoinDesk Indexes, the market standard for crypto assets since 2014. Our trusted data powers billions in publicly traded funds. CoinDesk Indexes are the standard used by institutions, and they're the key for investors looking to understand and access crypto markets.
CoinDesk Bitcoin Price Index, XBX, has been instrumental to Grayscale, enabling investors around the world to access Bitcoin through a regulated, familiar product.
CoinDesk Indexes enabled the early adopters to build crypto investment vehicles, and they're already trusted by a new generation of global investors.
Welcome back. Time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk, the State of Crypto newsletter. Good morning, Nick. Happy Friday. How are we closing out the week?
Good morning. So, as we said yesterday, the Build Back Better bill that has been championed by U.S. President Joe Biden was announced yesterday, and we finally got some draft text, which does include crypto tax provisions. Although, unlike the bipartisan infrastructure bill, these aren't really controversial. Right now, the bill, as designed, would basically close some tax loopholes that would allow people to, sort of arbitrage away to, any taxes they'd have to report. This was in a previous version of the bill that was published last month. No people saw it. No one really is concerned about it. The question now is whether or not this will pass and how much it's expected to raise.
Sorry, Nick.
Can't hear if you're saying anything.
Yeah, I was expecting you to lip read. Do we have any further details on, OCC versus SEC in terms of this stablecoin regulation that's coming? What's your hunch? There's been sort of different reports about, who's going to be regulating stablecoins going forward, whether it's the SEC or the OCC.
So from everything I've heard, the the kind of consensus so far seems to be leaning towards having the OCC treat stablecoin issuers similarly to banks. This would require congressional action. The Financial Stability Oversight Council could have a role in this, but the administration seems to want Congress to actually enact a law and, basically ensure that stablecoin issuers have to abide by these banking regulations. That does seem to be kind of the consensus over the SEC regulating stablecoins, since the SEC's purview would basically be limited to stablecoins that are backed by, a number of assets similar to money market funds. So that applies to the biggest stablecoins right now, but it wouldn't necessarily apply to all stablecoins.
All right, cool. Well, have a great weekend, Nick. Thanks for the update. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
In February, Nigeria banned crypto transactions within the banking sector. 4 months later, the country announced plans to launch a central bank digital currency, the e-naira. And now, here it is, launching earlier this week, thanks in large part to fintech company Bit, the developer behind the e-naira, as well as the Eastern Caribbean Central Bank's CBDC. Joining us now to discuss is Bit CEO, Brian Popelka. Hello there, Brian. So, first of all, how did you get it out so fast? That must have been a challenge. Is it ready for prime time?
Well, that's a good question. Thanks for having me. Good to see you all again. Yeah, certainly a challenge. I think that, the fact that we'd already had a product that was live in the Eastern Caribbean, we'd been working on this for many years ahead of this type of launch. And so we were fairly prepared with a product that we just simply had to customize for the Nigerian project specifically.
So is it, how has the rollout been? We have kind of a few days of data so far, and is it currently being used for anything? And what are some of the specific use cases? Because I think, for a lot of people, central bank digital currencies are a very abstract concept. So how are people on the ground actually using this week?
Yeah, thanks. It's sort of a methodical rollout typically, which is good for us. We like the idea that there are stages. Nigeria has a very fulsome roadmap for all of the uses that we hope to get to over the course of many years, which means that they and we, of course, are in it for the long haul. Post-launch, though, as you can imagine, as we initially roll out, it's really just signups. And so both the central bank has minted and dispersed digital currencies to several key financial institutions. And therefore, there are merchants and consumers that are really just getting in the App Store, downloading the app, and starting to move their traditional currencies over to digital form at this stage.
So, Brian, how much of a concern is it for Nigerians is it when it comes to privacy, that this is money that kind of tracks how you spend it, in essence?
Well, that's right. I think that this is a key question when we go into any jurisdiction, any country, is what is the trust factor with the government, with the central bank? What are the concerns around privacy? And so we've certainly seen a lot of debate through social media. And, we fully expect that. But what we hope is, and what we're seeing is huge interest. There were several million people.
But do you have a sense of what kind of data is being collected by the government, and what if any privacy features are being used to prevent that?
Yeah, I liken the privacy features of this to credit card companies. The government cannot see individual purchases; they see purchases sort of in bulk. Financial institutions, however, can track specific transactions just so that they can monitor fraud, same way you would as with a credit card. But the government is not tracking individuals; they're not tracking individuals along with individual transactions. For them, it's sort of a bulk transaction so that they can see that there is use on the network, basically.
What does this do for banking in
I'm just curious
Nigeria?
about where this interest is coming from. and just to clarify something, my understanding is that right now, this is only available to people that hold bank accounts. Is that correct? I know that one of the ultimate goals is to help the unbanked. Obviously, that's not the case right now. I guess you guys are working toward that. But when you say that there's huge interest and it's only people with bank accounts, so it's not actually helping the unbanked. So what is it like? Why are people so interested in it? Why are they excited about it? And also, can you just clarify that you are moving towards, extending it to people who don't have bank accounts?
Sure. Let me take the latter question first, which is around financial inclusion. And a bit of a lesson that we learned over the course of rolling out digital currency in Barbados and then through the Eastern Caribbean is that, initially we thought we would go directly provide wallets to those that didn't have bank accounts. But there's a key factor in that, which is trust. And it really turned out the lesson that kind of surprised us initially was the idea that we needed to really go through the traditional financial institutions, establish a sort of a baseline of trust that consumers and banked folks would use digital currency, and then folks that didn't have or were underbanked sort of had the trust factor to be able to download the app and start to interact with it. And so, within Nigeria, it's a real fast follower. We are. Just a matter of, as I mentioned, it's sort of a methodical rollout. This is our initial phase. A phone app specific for folks that are unbanked will be rolling out very soon. It's considered a fast follower for us, and so that's how we see the financial inclusion question coming through. But as far as interest goes, hard to say this early what the interest is. I imagine that it has a newness to it. I think people want to understand how it works. Can it work?
All right.
What can they use it for? Curiosity.
All right, Brian, we got to wrap it there. But thanks for joining us and good luck with the rollout. We're very interested to see how people in Nigeria start using this. That was BIT CEO Brian Popelka. Time now to check in with Crypto Twitter with our tweet of the day. And let's end the week with sobering macro commentary from the ever thoughtful Lynn Alden of Lynn Alden Investment Strategy, tweeting, when there is a lack of good money, persistently negative real yields for savers in this case, people historically tend to speculate. A lot of the things they speculate on, unfortunately, don't retain long-term purchasing power. It's memes all the way down until it's not. In other words, go easy on the dog coins purchases this week, folks. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitton. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all that Bitcoin coming up at noon is the hash. You're watching CoinDesk TV.